Welcome again, everyone. I think it's time to start, so let's not waste any time. My name is Eric Voges. I'm a CEO at Autochartist currently. I'll be covering a topic, trading chart patterns with Autochartist. I've taken some excerpts from various videos that we've created that is also available on our website. I'll show you a little bit later where to find them. The idea is just to give you an introduction to trading with chart patterns. Usually the format of this type of webinar is a little bit of idle banter between myself and Ilan Asbel, our CEO. He's unfortunately traveling in Denmark and the UK at the moment. So while we miss him, we look forward to seeing him next time. He's a very entertaining guy. Okay, so without any further ado, let's continue. Actually, no, before we continue, I wanted to quickly just run a quick poll to see what your levels of experience is as an audience. So please, if you don't mind, just tell me if you're a beginner trader, whether you've got a little bit more experience, or whether you're an expert. That will be really helpful for us. Okay, I'm stopping it with about half of the people having voted. Mostly beginners, and we've got a reasonable percentage of very experienced traders as well. Everybody very welcome. Thanks very much. And I promise you this is the last one, but since we're talking about chart patterns today, won't you please tell me what your level of experience is with chart patterns in particular, whether this is completely new to you or whether you are an expert on it. Okay, great. Some people are new and most people have a reasonable grasp. That is very helpful indeed. Thanks very much. So there are a couple of different aspects that I'll cover. Some of it is relating to obviously chart patterns in the beginning, the theory behind it, and then I'll also look at the difference that we make between emerging and chart patterns. Often there's a lot of confusion about that with people. And then finally I'll also take a quick look at the quality indicators, and depending on the number of questions we have and on the amount of time we've left, I might just look at a few of the latest patterns live on the platform as we go. So the theory behind chart patterns basically is around market psychology. Price goes up and people start buying a particular stock until it goes up to a level where in their minds it becomes too expensive, and then they stop buying it and they start selling it, and then the price starts going down again. Then it goes down to a level where people think, wow, now the stock is cheap again, I'm going to get it as a bargain, and then the price stops declining and it starts going up again. And so this is basically the cycle that keeps on going up and down, up and down. Basically what happens, well, why we call it market psychology is that everyone's actions are influencing everybody else's actions and decisions. So what happens is we've got these imaginary barriers that form, what we call support or resistance lines. The resistance lines are at the top. That's the point where buyers don't want to let the price rise anymore, and they start selling where everybody thinks something is too expensive. And at the bottom is the support level, where the market thinks this instrument is too cheap now, and the price can't go any lower. So chart patterns is basically nothing more than various combinations of these support and resistance lines that are set up at different angles to each other. A typical chart pattern has 4 touching points where it would intermittently touch the support, then resistance, then support, then resistance, or the other way around. So one, the other, one, the other. It bounces literally 4 times, touching it in between. And then depending on the angles of these different chart support and resistance lines, that determines what the actual pattern looks like. Now, the expectation is that after it's touched the lines 4 times, we expect the price to break through the support or resistance depending on the direction of the pattern. And with this breakout, we think there's a significant change in the reason why people believe this should be a support or resistance line, and the price would have a certain amount of momentum to move a bit further away from that level. And it is in that where we find the actual opportunity of chart patterns. When we find the breakout, the price will actually make a significant move, and it's really with significant moves that we as traders find what we are looking for, opportunities to make money. So, looking at the shapes of the lines, one example is a channel up. Both support and resistance are sloping upwards. They're actually parallel. Also with channel downs, they're parallel lines, in this case downward sloping. The rectangle is also a parallel support and resistance, but relatively horizontal. The triangle, on the other hand, have converging support and resistance. In other words, resistance is downward sloping at the top line, and the bottom line, the support, is upward sloping. And what happens is the price gets scrunched into a corner. The classic rising wedge pattern, this one you'll notice has an additional 5th touching point. So more than that, just the most common 4 touching points, this one has an additional 5th one. And what this means is that the actual the breakout of the pattern is now going to be in the opposite direction of the initial trend. And this is an important distinction between different classes of chart patterns. You get ones that are what we call reversal patterns. Typical examples are head and shoulders, double top, double bottom, triple top, and triple bottom. These are all patterns where the initial trend goes to an opposite direction of the breakout. Here's a quick distinction between the two. The initial trend is simply the direction of the price graph before the chart pattern that immediately precedes the chart pattern. So if we are on a bullish trend and we find and the pattern occurs and the breakout is also expected to be bullish, it'll be a continuation pattern. If we're in a bullish trend and we expect the breakout of this pattern to change and it'll be a bearish breakout, it'll obviously be a reversal pattern. Altogether, we have 16 of what we consider the most important chart patterns that we identify. Some of these are continuations, some are reversals. Another important distinction that we make is between patterns that are trending, and this is in a case where we have sufficient, let's call it, space between support and resistance where the lines are relatively parallel, and we can clearly see a trend being established. The price sort of bouncing between these levels, and there's a very clear trading range. And we contrast that with non-trending patterns like the triangles, where the price bounces between a converging support and resistance, where it definitely won't continue indefinitely. And you see there's a point where just with a normal way price bounces between these levels, price has to break out because the range gets narrower and narrower, and it's inevitable that the price has to break out. So here we don't see the range as a trending range, so that's why we call it a non-trending pattern. In addition, Autochartist also identifies chart patterns before they break out of the support resistance lines. Like in this case, with emerging patterns, we see they're not really fully formed according to the charting theory. The theory only really applies when when price breaks through the support or resistance line. But here we have a situation where the price has actually um, it made its 4 touching points. It's formed the shape of the pattern. So we can see this one is a channel down. It's got relatively parallel sloping lines. The only thing that needs to happen for it to be an accepted chart pattern according to the theory is for it to break through the level. To break, in this case, through the resistance level. Completed patterns, on the other hand, are patterns that have broken through, and they have a specified target level where we're expecting price to break, with the price to rise to, according to the charting theory. So emerging patterns are particularly useful for swing traders, and they are particularly interested in trending emerging patterns. Remember what you said earlier, trending patterns are the ones where there's a relative openness, open space between support and resistance, where that gap doesn't close too fast. Because here we see a possibility of the price continuing to bounce between support and resistance levels. To see which direction the pattern, the expectation is, we've included this little helpful arrow. In case of emerging patterns, it's easy to spot, to see on the graph whether we're looking at an emerging pattern or a completed pattern. For emerging patterns, as I said before, the price is between support and resistance, but there are also these two yellow dotted lines that kind of extend the support and resistance lines, and that is an indication of the range that we expect, or that the typical swing trader would expect the price to bounce off in between, you know, for the rest of this range. On this graph, basically what I've illustrated here is the emerging pattern expectation, the swing trader expecting the price to bounce between the indicated yellow dotted lines, the extensions of support and resistance, and looking at the difference between completed patterns. Completed patterns has this indicated block, the gray block that we've just colored in, and it also has a price level that is indicated with a color, green color for bullish patterns, red for bearish. Completed patterns must have had a breakout for it to happen, and what we found with our statistics is that there would typically be about a 70% chance of completed patterns reaching the target level after they've broken through. For more information on that, you can email support@autochartist.com. They will send you a white paper that was written on this after an extensive study was done a couple of years ago. I think it was the end of 2009. Also, another difference between emerging and completed patterns, you'll find it in this little column of the arrows. You'll see some are pointing upwards and some are pointing downwards. Some are colored in and some are not. So typically completed patterns would be would have colored in arrows, bullish or bearish, and emerging patterns would still be grayed out. So for a completed pattern, the direction arrow is colored in, while for emerging patterns, they're grayed out. There's also a video on the website on the application that you can access with a little bit more of an explanation on the difference between support, completed and emerging patterns. Okay, I'd like to take a quick look at the quality indicators. We've got 5 different quality indicators. 4 of them are very much geared towards visual quality. So it's really an aid for beginner traders, people who aren't very used to chart patterns. Eventually, you wouldn't even look at these quality indicators anymore. It'll become second nature to you to know what is a well-formed chart pattern or not. And to sum it up in a very brief sentence, if people ask me, how do you know that a chart pattern is a good quality one, I simply say, it looks good. It looks smooth, it looks clear, it's crisp, it's easy to see, it's easy to understand. And that's why I say a lot of these indicators are visual indicators, and they basically just explain to you that what you're looking at is a clearly formed and a good-looking chart pattern. So the quality indicators you'll find in this little block over here on the right-hand side of the application. You'll see those little colored bars. Each indicator is a score from 0 to 10, and they're illustrated graphically as a number of little colored squares. Like in this example, you'll see this pattern had a good breakout, strong breakout, good clarity and uniformity, but not such a great initial trend. So let's look at each of these patterns in a little bit, with these quality indicators in a little bit more detail. The first one I'd like to discuss is initial trend. So as part of the theory of chart patterns, it suggests that the move that you can expect after the pattern is completed is in some proportion to the initial trend. So the initial trend is really it's a very important part of the quality of a pattern. Patterns that have a good solid in preceding run, a trend, bullish or bearish, are usually a little bit more successful than ones that don't have a good initial trend. So in this example, you see that where the arrow indicates we've got a very nice bullish initial trend that it goes just before this head and shoulders. Now in this example is an example of a weak initial trend. The initial trend is supposed to be bearish. In fact, it almost looks more to be a bullish initial trend, but there's a tiny little downward dip, and if you look at it relative to the overall shape of the pattern, it's really not a strong initial trend at all. It's a very important quality indicator. The next indicator I want to look at is clarity. It's quite simply the degree of which it's the degree of noise that you would find in the pattern. So a pattern with good clarity or little noise would look very smooth and very clear. It would almost look like a thin line with very clear touching points. Very easy to distinguish where the pattern touches, where it goes from support to resistance and back to support again, without a lot of choppiness in the movement of price. Here's an example of weaker clarity, especially around the midsection of the pattern. There's a lot of ups and downs, sideways. It's not a very clear line that moves from support to resistance. There are even some much worse examples than this one. But compared to the previous slide, you'll see that it's much less clear. The next indicator I want to look at is the strength of the breakout. This has simply to do with the size of the move that goes through the support or resistance line. Remember, a pattern only completes once the price has moved beyond the range. In other words, it had to go from inside the range to the outside of the range, and in that it had to cross support or resistance. In this case, it broke through the resistance line and had a massive move until where that candle closed. So the further that the closing price is away from the barrier line, the support or resistance line, that is going to be how good or how strong the breakout is. So we expecting if there's a strong breakout, we think the price will have a strong momentum and it should give us a better chance of reaching the target level. Obviously, emerging patterns that are still trading inside the range won't have a breakout reading at all. Just to contrast that with a weak breakout, in this case, we see the price is barely just closed, barely just beyond the resistance line, and it doesn't really give us a very strong indication of a good momentum for a bullish move to follow towards the target level. Next indicator I want to look at is uniformity. This is also something that's quite difficult to explain to people unless you can use a picture like this one. Now, the uniformity is also very much to do with the aesthetically pleasingness of the pattern. If we have touching points that are evenly spaced, then they are nice and uniformly spaced. That's why we call it uniformity. Especially if the support and resistance lines are more or less parallel, we should expect to have the touching points in relatively equidistant intervals. Now, obviously, if the support and resistance lines are converging like a very sharp triangle, then we should expect the touching points also to become a little bit closer together as the pattern reaches its end and as the support and resistance lines get a little bit closer. So this is still acceptable because you can't expect the touching points to be equidistant if the space in which the price graph moves becomes narrower and narrower. So this is still acceptable uniformity because of the conversion of the support and resistance lines. However, if we have a situation like this one, where you have two touching points relatively close, then a huge gap, and then a tiny little gap, then we think the uniformity is completely out of whack. It is really not ideal, and it doesn't make for a pattern that looks aesthetically pleasing. So if you took away all of the lines from this graph and you asked someone, do you see a chart pattern here? Most people would say, I don't really. Then we have a fifth indicator, and that's for volume, and this is only applicable where we have instruments that actually have a volume associated with it. So typically it's only exchange traded instruments. On the forex markets, you don't really know the total volume because you're typically trading only with a single broker, and they don't make up the entire volume, the entire $3 or $3.5 trillion that are traded per day. So where this applies, like on stocks, equities that are traded on exchanges, this quality indicator is a measure for how the volume traded has increased towards the end of the pattern formation. So if you have a higher volume overall towards the end of the formation relative to the beginning of the formation, then you get a better volume rating. It's a very important confirmation of how the market accepts the change in price. If the volume goes up, then it means that there are more people involved, more people with more opinions and a broader reach of the market psychology mechanism, which is what these patterns are based on. Okay, so those were the quality indicators. I want to quickly see where we are in terms of questions, sound, etc. Okay, I think the sound is much better. I'm going to just switch to my browser application. If you could just bear with me a second. Now, for those of you who aren't that familiar with the Autochartist platform yet, something important to look at is this area over here. It's the results filter. I'm just going to outline it with a highlighter. This is where you select the type of patterns that you want to look at. Now, obviously, for this talk, I'm only looking at chart patterns. So I've basically unselected everything else. I've unselected the Fibonacci patterns and the key levels. But if I want to include them in my view, I simply select all of them, and then I see all types of patterns appearing down below in the grid. It happens in real time as you check or uncheck them. So I've unchecked the emerging patterns as well. First, I just want to look at some completed patterns. Okay, so let's see what we got. Market should be open, but we obviously don't have any new patterns yet from yesterday. That's why we still got the end of day patterns coming through from yesterday's trading day. This is a very nicely formed, this pattern looks very clear, it's very pretty, it looks very nice. If we look at the quality indicators though, the only one that doesn't look very great is the breakout and also the initial trend. The initial trend is not, we don't have a very nice bearish trend preceding it, and the breakout doesn't seem that strong, but very nice clarity and uniformity. So now take a look at the next one. I'm just going to just quickly scroll through a few of them. Also not a bad pattern, good strong breakout. Looks kind of pretty. I would go with that one as well. The next one, channel down. Okay, here we have possibly something, a problem in the data. It could have been a stock split. What sometimes happens before we, before the stock split data comes through in our feed, you find that you have a crazy big breakout where something like a stock had a split. Like this one could have been 1 to 3 maybe, who knows. Not something I would believe that I would trade on. Here's a great example of a very fast converging triangle. We've got the touching point up there, one down here, and then the next two very close together. So you would have to ask yourself, you know, with this kind of situation, is the breakout a real positive breakout? The indication of it is very good. We had a nice move beyond the support, beyond the resistance line. However, it might just be a little bit of noise if you take it relative to this small section over here. There seems to be another range forming sort of parallel over here. I would expect it to move a little bit higher, but there may be resistance found at this level around between 31 and 32. Again, this triangle, a very tightly formed, so the angle of this triangle is very sharp, and the breakout is not that strong. Like we always encourage our clients, don't ever use these chart pattern signals in isolation. You should take it as a starting point if you are looking for trading opportunities. We give you a summary of fresh trading opportunities, but then before you trade something, if you find a chart pattern that you're not very certain about, make sure that you look at the news, look at other types of indicators for that symbol. Very importantly, look at different time granularities. These patterns here are, we've only looked at ones that are end of day patterns seemingly, because they're the ones with the youngest age. I'll tell you a little bit more about the age in a minute. So they're the freshest ones. But also see what's happening on a 15, 30-minute or a 60-minute granularity, especially with highly liquid instruments like Forex. You could find a completely different story on a 15-minute graph than what you do on an end-of-day graph. So I'm going to quickly switch to emerging patterns, look at a few of those, see what we see over there. While I'm waiting for the graph to update, there was a few questions that I just want to field. The one guy asked, I think he's left now, but he asked, at what point does one enter a trade? When the pattern is complete or when it is emerging? Now this is exactly what we've come to learn, the difference between swing traders and trend traders, that the guy who's looking for an ongoing trend where the price bounces between support and resistance, he would look for emerging patterns, but he would look for trending ones. Like this one, it's a non-trending emerging pattern. It doesn't actually tell us very much. There's a very tiny little move we're expecting before it reaches the resistance level again. I don't think this is a tradable pattern at all. Let's just look at a few. Now here we've got a couple of channels, channel ups and downs. Channels by definition should be trending patterns, so hopefully there'll be a nice range to trade in. This is not a bad range. The price actually came down quite far in the range. It went up. It may very well just come back down to this range, or once again afterwards move back up to resistance. Also a very nicely formed emerging pattern. Pay careful attention to the length of the pattern. That is this column over here. Let me just highlight it for you. The length column. This is very important because it tells you the duration of the pattern. So you know that if you enter this trade now, if you enter if you use this pattern as a signal to enter a trade, it formed over 160 candles. Now each candle in this case is 1,440 minutes long. That means it's a day. So each candle represents a day. Now there are only 5 trading days in a week typically. So you've got 160 divided by 5, which is 26 weeks. So this pattern formed over 26 weeks. So it's like half a year. It's a 6 months period over which this pattern is formed. So you could expect the culmination of it, or the increase for it, before it reaches the resistance line, to take months. So if you are not if your strategy is not buy and hold, if you're not an investor type of trader, then maybe this won't be that interesting for you, unless you find something on a shorter time frame that is also in the same direction as the general trend. So if you think that over the 6-month period you're expecting a pattern to be, or a stock to have a bullish direction, then you might want to look for shorter term trades that is in the same direction, where you can collect a nice little bit of profit. And that should be the same. It's the same stock. Let's go to the next one. Amgen. This one, I do believe, oh, this is the completed one we've looked at already. Sorry, I'm just going to uncheck the completed ones. That was a pretty one. I thought I recognized it. Here we've got a falling wedge. Also a nice open trading range. We find in the wedges, falling or rising wedges, that often the support and resistance lines are not so very convergent. So there's also nice kind of a non-trending aspect to the wedges that traders rather enjoy. Okay, I'm just going to quickly look at some questions. Sorry, a lot of the comments and the questions are about the poor sound quality, and I must apologize for that again. Let me just take this opportunity to invite you now. If you want to ask anything specific, I'd field your questions for the next 20 minutes or so. Um, Brian asked, what are the strongest type of patterns? The best performing patterns that we find are the head and shoulders and inverse head and shoulders. Also the wedges are strong performers. The triangles are ones that you see the most of, so you'll have more triangles than you'll have anything else. But their performance are kind of average. Then the weaker patterns are, if I remember correctly, I think rectangles are not very strong. All of this information, Brian, you'll find in the study that we have given, that we've made available. So just email support@autochartist.com and ask them for the white paper. And in there is a whole lot of information on a study that we've done over a 10-year period of Forex symbols, with literally thousands of patterns that were evaluated. And we found that those numbers are pretty much the same, not only for Forex, but also for other exchanges, equities, commodities. It's usually between the 60 to 80% mark, the overall pattern, the chart pattern success. I've got a lot of questions of particular symbols and instruments. Okay, let me show you quickly for the new guys. If you wanna look at, people ask me, for example, what's happening on Euro USD. So I'm gonna start a new search. I'm gonna choose my symbol Euro USD Forex, and I'm gonna add both intraday and end of day. And then I'll just quickly see what we've got at the moment. What are the latest patterns? I'll include completed and emerging. Here's an interesting question. Gold has developed a triangle pattern over the last 9 months. Did Autochartist identify this? I would be very interested to know whether it did. Wonder if I should add it to the same one. Let me create a new search for that one. That'll be interesting to answer. Brian also asked, can you have a pattern within a pattern? Absolutely you can, and this also often sparks a lot of confusion where you have a short-term pattern inside a long-term pattern, and they sometimes have opposing views. So the one says it's going up, and the other one says it's going down, and what's strange about it is that both can actually be right. So you could have a short-term bearish that is happening inside a much longer-term bullish symbol. So yeah, that's definitely possible. I wonder if this is, oh no, we've got a rectangle here. This is on gold. I can see the triangle that you're talking about. I wonder if my data here is a little bit dodgy, that made it think this is a rectangle instead of a triangle. The next ones we have are only, yeah, this is the largest one we've got. These other ones are much shorter term patterns. So it looks like, no, we didn't detect it, but I would suspect it's because of this little bit of funny data. I'm not 100% sure if this is a data spike or not, so I'm afraid I can't answer you on the gold. Let's come back to the Euro USD and see what it's doing at the moment. Oh, something else that I just want to also point out is that we've got these two tabs, active trading opportunities and expired trading opportunities. I'm just going to quickly highlight them here. Active and expired. There. Now what they mean is that under the active trading opportunities on this tab, all of the opportunities are there, all the patterns listed on this page are still tradable. So like in this case, we've had a breakout, the price has moved a little bit afterwards, but it hasn't yet reached its target level. Similarly, it also hasn't gone completely the other way, that we think there's no chance it'll ever reach the target level. So we've we're still basically anticipating. You can see these two empty, or what can you call them? They've got white bodies, these candles afterwards. These are what happened afterwards, after the pattern was actually identified. So each one represents an hour. If we look at the interval, it's an hourly chart. So 2 hours went by since this pattern was identified, and that is also what we mean by the age of this pattern. Its age is 2 candles. It is 2 candles old. It's 2 candles since we've identified it. Now the age of a pattern is important, is an important indication of the freshness of the pattern. So it doesn't matter whether each bar represents a day or 15 minutes or whatever. The more bars that we have after the completion of a pattern, the more likely it is that the pattern will have gone stale. So that's why we sort our patterns initially only on age. So it's in descending order. So the freshest patterns will appear first, the ones that are 0 age old, and then secondly we sort it on the time when it was identified. So you'd first have the latest 0 age pattern, age of 0 candles, and after that you'll have the next one that is 0 candles old, but identified just a little bit earlier. So this is all that Euro USD has come up with. Let me see, I'm just going to refresh it again if I can get my mouse back. Yeah, this is the only one that's there. This is a 60-minute pattern. It occurred 2 hours ago, and it's not a very huge pattern, but it looks like it's expecting the euro to go back to 126.19. What can I tell you? It may or it may not. This pattern looks pretty good. I think there's a good chance that it will. Now, if you keep this application open for a long time, obviously this is a brand new search for me, this Euro USD search. The longer you keep it open, the more you'll find expired trading opportunities. This one will grow as time goes by. So all the active opportunities that expires will basically move to this one. See what happened here. In this case, we've had this. It's a little bit shorter. It's a little bit. It's about the same length. What was this one? This one was length 21. This one is length 29. But it happened quite a bit longer ago. As you can see, the age is probably about a day ago or half a day ago that this pattern formed. And what happened is that it actually the price actually reached the resistance line. and that's why this emerging pattern was expired effectively. So you'll find patterns expiring either because they reach their target levels, or because the price goes completely wrong and it looks like it won't ever reach its target level at all. Okay, let me see if I can find, I'm just going to look through some more questions. Pete, does the software consider any candle patterns in the validity of the overall chart pattern? We don't at the moment. However, we have already done the research to implement candle patterns. It's really just a matter of us refining that kind of analysis before we can add it to our overall analysis. So no, the short answer to your question is no, we don't do it at the moment, but we hope to add candle patterns in the near future. Are short time frame patterns more accurate, like 15-minute compared to 30-minute? No, in fact, it is the opposite. We find that the longer the time frames are, and also the longer the lengths of the patterns are, you have a better accuracy. So that is also the reason why we don't even show patterns on a shorter time frame. For stocks, typically we only start patterns on about a 30-minute time granularity, and we don't show anything shorter than 15 minutes. So even for Forex, which are the most liquid instruments, we don't have 5-minute or 1-minute patterns. We can do it, we can scan it, but the patterns are really just noise and garbage. So it's not really useful at all. Remember, the psychology of the market is behind these patterns. And if you have a pattern that formed over 15 or 30 minutes, it's like nobody has even had a chance to think about, what it means. People are still digesting the information. So that's why you've got a much better quality pattern that forms over hours or over days than in such a short time frame. Is the Autochartist available on iPad or Android? Kelly, no, it isn't at the moment, but it actually is, because what we've done, the reason why we've changed the layout of the web application, made it much more narrower and compact, is in fact to make it suitable for the iPad. You can, if you just open it in your Safari browser, you'll find that it actually looks quite nice. It's actually very, very usable on the iPad. So although we don't have an app as such, you can definitely use it in your browser if you have access to it. What are the key elements you're looking at when you activate chart patterns before you take a trade? I must say, for me, obviously, the pattern must be aesthetically pleasing. It must have good quality. It must look good, and I want to see a really nice tradable opportunity. I want to go back just to create a search for Forex. Usually I have some really nice patterns on Forex. Oh, here we go, the currencies. Used to using a different version. Let's just look at a few examples. I'm going to quickly look for in terms of a channel like this one. I'm looking for emerging patterns. I'm looking for a very nice open mouth of the range that I'm looking at. Yeah. Let's look at a few examples here. Also, for me, what's important is it must look realistic. I also very much look at previous support and resistance levels. So if a pattern breaks out, wherever the resistance level is, or the support level, the target level, I look at previous support levels that are more or less in line with it. Sorry, resist. If I'm looking at a bullish pattern, I'm looking for previous resistance. I typically also use the key levels very much in conjunction with the chart patterns, because if you've got one type of analysis that confirms another type of analysis, that makes the trade for me much more palatable. That like it the one supports the other one, and you know, even if I can hear something in the news about a particular currency, or if it's a stock I'm trading, you know, anything, I'm actually looking for as many as possible opinions that support this pattern, and the more I find on that, the more tradable it makes for me, the more uh, you know, the safer I feel with it, because it's a game of chance. All I'm trying to do when I'm trading is I want to maximize the probability of my success. Is it possible to filter out patterns from lower time frames like the 15-minute patterns? Yes, it certainly is possible. You can either create a search looking at only particular types of time granularities, or if you're not interested in a certain interval, you can just sort on this column, on the interval column, and scroll down until you find the granularity that you're looking for. If you want 60 minutes, here they're all sorted together. Once again, this in the subgrouping will also be listed according to age. It's got a nice emerging pattern on Euro Yen. Okay, what I want to do also show you is where you find the educational videos. This little section here are links to videos that we've recorded over the past, I don't know how long. They're still pretty new and fresh. So follow those links, and they're all relatively short, between about 6 and 8 minutes each, on different topics. Over here, the little Market Watch window is where you find a link to the latest report of our analyst, James Hyerchik. He will also be doing a couple of webinars coming up. He basically takes every day, he looks at a stock or a forex opportunity or commodity or whatever, and he will just do a very quick 3-minute analysis on that. So that's also very useful, and what we want him to do in the near future as well is to give us, maybe on a weekly level, some kind of a breakdown to say, look, this is what the opportunities that we looked at over this week. Let's see where they're at now. How many of them were successful, how many of them were not, what went wrong, whatever, just to give a bit of a debriefing at the end of that. So if you're interested in that, definitely tune in to see James's analysis. James is a very, very experienced guy. He's got a wealth of knowledge on the markets. So he's definitely worth listening to. Okay, I've just been flagged. It looks like we've run out of time. I'm sorry if I didn't get to your questions. But as always, you're welcome to send us your queries to support@autochartist.com. We'll get to them as soon as we can. And Yvette, I don't know if you're still online, but I don't know what the next session is. We'll probably have one with myself and Ilan again in about 2 weeks' time. Otherwise, look out for the next webinars by James, and yeah, we invite you to also look at the daily Market Watch videos. Thanks very much for attending. It is I'm really, once again, sorry for my poor show with the internet and all of that. You would expect us to be a little bit more professional, but I guess that's how life goes. Thanks very much. I wish you all of the best for your trading, and hope for you to join us again at the next webinar.